You got audited. The IRS sent you a bill. You did not respond in time, or you responded and lost. Most people think that fight is over. It is not. There is a process called audit reconsideration. It lets you reopen an audit you already lost, present new evidence, and have the IRS reduce or wipe out the assessment. The tool is Form 12661. I have used this to knock six-figure audit bills down to zero. It works when most other strategies do not. Here is how. Part 1. Why most audits end with a bad result. The IRS runs more correspondence audits than face-to-face audits. You get a letter in the mail asking for proof of business expenses, charitable contributions, or unreported income. Most people lose these audits for three reasons. 1. They never received the letter because they moved or the IRS used an old address. The audit defaults against them. 2. They received the letter but did not respond by the deadline. The IRS issues a notice of deficiency and then assesses the proposed tax. 3. They responded but sent the wrong documents or sent too little. The auditor disallowed the deductions and assessed extra tax, penalties, and interest. In every one of these cases, the case file is sitting in an IRS archive. You can reopen it with Form 12661 if you have new information the IRS never saw. Part 2. When you can file audit reconsideration. You qualify for reconsideration if three things are true. First, the tax has been assessed but not fully paid. If you already paid the full balance, you cannot use reconsideration. You have to file an amended return, Form 1040X, instead. Second, you have new information the IRS has not seen. New receipts, new bank statements, a new bookkeeper review, a new affidavit from a witness. Third, the original audit decision was incorrect, or you have a math error to fix on the IRS side. You cannot use reconsideration just because you disagree. You have to bring something new to the table. Part 3. What kills most reconsideration requests? The IRS rejects most reconsideration filings for one reason. The taxpayer sent in the same documents they already sent before, or sent in a letter complaining without any documents at all. The IRS examiner reviewing your file is going to compare your new submission to what is already in the case. If you have nothing new, the case stays closed. Here is what counts as new evidence. Bank statements you never produced before, receipts pulled from old vendor accounts, mileage logs reconstructed from calendar entries, credit card statements showing business activity, a signed statement from a person who paid you in cash, reconstructed accounting records prepared by a professional after the audit closed. Anything that was already in the audit file does not count. The examiner already saw it and ruled against it. Part 4. The CP2000 trap.
A CP2000 is not technically an audit. It is an underreporter notice. The IRS matched your tax return against the income reports it received from employers, brokers, banks, and gig platforms. The numbers do not match. A CP2000 turns into an assessment if you do not respond within 30 days. Most people miss the deadline because they think the IRS will fix it on their own. You can still use Form 12661 to fix a CP2000 assessment after the fact. This is one of the most common reconsideration requests I file. The trick is showing the IRS that the matched income was already on your return, or that the third-party report was wrong. For example, brokerage 1099-B forms often miss cost basis. A car sold for $10,000 that you bought for $9,000 looks like $10,000 of capital gains to the IRS. The fix is showing the basis. Part 5. How to file Form 12661 correctly. A clean reconsideration package has 5 parts. 1. The form itself, with each disputed issue listed line by line. Do not just write a paragraph. Tell the examiner exactly what numbers from the audit report you are disputing. 2. A copy of the original Form 4549, the audit report. The IRS examiner will want to match your disputes to the original findings. 3. Your new evidence. Tab it, label it, reference each tab in your form. 4. A short cover letter signed by you, 2 pages at most, plain language, no legal arguments unless you have a tax attorney. 5. If you have a tax professional helping you, attach Form 2848, power of attorney, so the examiner can talk to them. Mail the package to the IRS office that handled the original audit. The address is on your audit report. Send certified mail with return receipt. Keep a copy of everything you send. Part 6. What happens after you file? The IRS examiner has 30 days to acknowledge your request. The full review usually takes 90 to 180 days. During the review, collections on the disputed tax stop. The IRS will not levy you or seize bank accounts for the tax under reconsideration. Interest still runs on the balance. You get one of 3 outcomes. The IRS reverses the audit entirely. The IRS reduces the audit. The IRS keeps the original result. If the IRS keeps the result, you can request an appeals conference. Appeals is a separate office inside the IRS that reviews the examiner's decision with fresh eyes. Many cases settle at appeals after reconsideration was denied. Part 7. A real case. A small business owner came to me with a $47,000 audit bill. The IRS had disallowed every business expense on his Schedule C for 1 tax year. He never received the audit notice. He had moved. The case defaulted against him 18 months earlier. We pulled 3 years of bank statements and credit card statements. We rebuilt the entire expense ledger. We tied each transaction to a vendor. We attached receipts where we had them and bank line items where we did not.
The reconsideration package took 2 weeks to assemble. 11 weeks later, the examiner reversed the audit. Total tax reduced from $47,000 to $1,700. That client almost paid the wrong bill for the rest of his life. Part 8. The hardship leverage. While your reconsideration is pending, you can also request currently not collectible status if the IRS tries to collect the undisputed portion. This protects bank accounts and wages from levy. You can also negotiate a payment plan based on the original liability minus the disputed portion. This gives the IRS something to work with while you fight the disputed years. The IRS often offers a quick partial settlement at this point. Be careful. Settling closes the door on full reconsideration. Get a second opinion before signing anything. Part 9. The window matters. Audit reconsideration does not have a hard statute of limitations like an amended return. You can usually file even 10 years after the audit closed. But the case file gets destroyed eventually, and memories fade. Get this filed within 3 years of the audit if you can. The IRS treats fresh cases with more attention. If the collection statute is about to expire on the audited year, the IRS may not even bother with a serious review. They know the debt is going away anyway. Time your filing carefully. Part 10. The takeaway. Losing an audit is not the end. The IRS gives you a path back through Form 12661 if you have new evidence and the tax has not been paid. Most people never file because they think the IRS will not budge. The IRS reverses or reduces a large share of reconsideration cases every year. The agency wants the right tax collected, not just the assessed tax. If you have an audit bill that does not feel right, pull the case file. Find new evidence. File a clean reconsideration package. The bill that has been sitting on your credit report for years may not survive a real review. Dean Michael, the Tax Doctor.